My name is David Jaffe. Welcome to the Wealth and Health Podcast, where you'll learn valuable skills and positive habits that will improve your life. This podcast originally aired as a video on my YouTube channel at youtube.com/BestStockStrategy. The Wealth and Health Podcast is brought to you by BestStockStrategy.com. Options trading for June 2021. Please subscribe to the channel and also turn on notifications. In this video, you're going to learn about options trading and you're going to follow my trades. These are the exact trades that are sent to my students. You can enroll for the 7-day trial. It's only $19 at beststockstrategy.com/memberships. And without further ado, let's get started and hopefully you find this video very valuable. June 1st, you can see that I rolled the trade up. I closed out the 2300 and then opened the 2500 and picked up an incremental $1,600. Here I rolled in the July 2200 to reduce the expiration from July to June. For Square, I rolled in Square and reduced the duration from August to July. And in order to finance that, I increased the width of the strikes from $10 to $15. So here I rolled in Zillow. I rolled in Zillow by 1 month, and I financed it by selling a short-dated put option. The roll filled at 113, and I sold a put for 116. So I made a lot of small adjustments. Shopify, I bought it back, sold it for 220, bought it back for 65, close for a 70% profit. Not much movement, although volatility was up around 70%, which is 7%, which is a lot. June 2nd. So I sold Airbnb for almost $1 and bought it back for 40 cents. Bought back MasterCard. Closing trade, closed for a 65% profit. S&P up 6. VIX down around 2.4%. June 3rd. New trade on Amazon. Then I give the spread leg. VIX up 8%. S&P was down 33. Then we wanted to wait because we want to make sure that we're not catching a falling knife. New trade on Tesla. Picked up about $460. S&P down 15, so it rallied. June 4th. We have the Tesla trade expiring worthless. Airbnb is up 3. Okay. Tesla's up 14. New trade on Amazon picked up $610. Then I give the spread leg. Tesla was up 24. The Tesla position is showing a 50% gain in less than a day. Rolled Amazon and picked up an extra $539. Closed out the original. It was trading for about 40 cents when I rolled it, so we kept a large amount of the premium on that. I didn't have the original 2620. Very good day for us. The S&P was up 37. Volatility fell very substantially. June 7th, I rolled Square, small adjustment, where I decreased the short put by $2.50. And then I financed that by selling a short-dated put, and I picked up an incremental $15. New opening trade on Amazon. Low B plus grade, picked up almost $600. Uber, closing trade. So for Uber, it was interesting because we thought that it was oversold. So I actually rolled the short put from 45 to 50 so that it was in the money, and I picked up some of the intrinsic premium and waited for it to increase in value. So that was actually very interesting. If you want to free up buying power, you can close out these winners. Tesla, not much movement on June 7th. The S&P was only down 3. June 8th, Square, adjusted Square, roll it in a week and also reduce the strike by $2.50. S&P was about even as on June 8th as well. June 9th. So the top one is the closing trade. Bought it back for 26 cents. Sold it for $1.04. closed for a 75% profit. New opening trade on Amazon, B plus grade, picked up $153. So you can see that I'm trying to balance out my portfolio deltas. I was too early with Amazon. Closing trade for MasterCard. Sold for $1.24, bought back for 55 cents. Amazon rolled, reduced the risk, lowered the number of contracts from 2 to 1, picked up a credit and locked in profits. Made good money on the original position. This was the original roll. So we picked up an incremental $717 and we rolled it from 3 to 2. Closing trade for MasterCard. Closed for a 50% profit. S&P was down slightly. June 10th. Adjustment for Airbnb. So I rolled the long 120 to 125 and financed it by selling 2 of the 133 strikes that expire next week. So you can see that I wanted to narrow the width of the strikes from 120 to 125, and I financed it by selling the 2 133 puts that expire with a 1-week expiration. Closing trade on Amazon. Sold for $420 and bought back for $120. S&P up 20. VIX down 10%. June 11th. Our portfolio is at a year-to-date high. 2 positions expiring today. Square and Tesla. Closing trade for Amazon. Sold for $405. Bought back for $55. Held the trade for 40 days. So the original position showed a $550 profit. Closing trade. So we sold for $945 and we bought it back for $80. Nice profit. S&P up 8. June 14th. Great opening. We're at a year-to-date high. Amazon is up. Okay, so I rolled Zillow. So I guess I numbered it 1, 2, 3. Basically what I did was I reduced the expiration by 1 week. Then I reduced the risk by $500. I rolled it up. I rolled up the long put from 90 to 95. Then I closed out the 101 strike that expires this week and rolled it to a July 2nd with a 99 strike and picked up a credit of $53. The first 2 trades cost me $47. So I made money on this roll while also reducing the expiration by a week and reducing the width of the credit spreads by 50%. Now I'm going to put in a limit buy order to close out the short spread, and I'll wait until it fills. It'll likely fill in 1 to 2 weeks as the option decays in the future. 2 positions expiring this week. They are so far out of the money, there's no need to close them out now unless you need the buying power. S&P up 8, June 15th. So I sold a Facebook call spread for 10 cents. I just wanted it to get challenged so then I can roll down the short put from 395 to like 370 and potentially capture some of the intrinsic premium. But it didn't get challenged and it's going to expire actually this upcoming week because right now I think today is like July 17th or so. July 16th, I don't know, it's one of those days. So basically like this position on Facebook is going to expire this upcoming Friday. Closing trade on Amazon. Here's where we rolled it from 2 to 1 and collected $49. And this is where we rolled it from 3 to 2 to pick up $717. Probably made around $2,000 of profit. June 16th. New opening trade on PayPal. High B grade. June 17th. So calls on PayPal. Rolled managed PayPal just to reduce the expiration by a month. So reduced it from September to August. Then I financed it by selling the 310 calls. Rolled Airbnb and rolled down from 140 to 135. And actually that was pretty smart because right now, July 16th on Friday, Airbnb actually closed down about $3. So looking at it in hindsight, Airbnb, I think it opened up like on Friday, July 16th at about 138, and then it traded up in the morning by about like $1 to about 139, 139.50, and then it actually closed down below 135 to about 134. And I think that its low on Friday was about 133.5. Now I actually ended up closing this trade out early, But, this is why it's very important to actively manage your positions and get rid of a position that you believe is challenged to reduce risk and just get it out of your portfolio. But you can see that I took the necessary steps where I reduced the strike price from 140 to 135, and then you'll see later on where I actually close out this trade for a profit. So here's the 133 square, close for a nice profit. Okay, so this is square. Okay, so here you can see like all the trades from April and May. I don't know, it's going to be hard to, I'll have to do a separate video on this if I choose to do it, because it's going to be hard to explain everything. And I'm going to have to look over it myself to remember exactly what I did and go through it, because if I try to do it on the fly right now, then it's going to sound really bad because I'm not prepared and I'm going to be looking at it and trying to figure it out while I'm also making a video for you. So I'll try to address that later on. So the original was a short 185, 155, picked up $138. Then on May 12th, I rolled the 155 to 170 and rolled it out to September. This reduced the width of the spread by 50%. This brought in an additional $55. So we collected 185 up to this point in credit. Okay, so it looks like I actually did the analysis when I sent the trades. Then on May 19th, I rolled the 170 to 175 and picked up an extra $14. Then on May 27th, I rolled it to August and collected no additional credit after fees. So we collected about $200. Then on June 1st, I rolled from August to July, so reduced the expiration by a month and rolled up the strikes, C3. Then I rolled down the short put from 205 to 202.5 by selling the short dated put and collecting an extra $15. So we've collected $215. Then on June 8th, I reduced it from 202.5 to 200 and reduced the expiration by a week and financed it. This collected another $20, so $235 in total. Then I just closed out the 200, 195 for $17. So we made $218 of total profit per spread sold. The takeaway is if a position gets challenged, make sure you do everything possible to stabilize it and reduce risk. Then once things stabilize, you can work on shortening the expirations if necessary. S&P down 2, June 18th. S&P down 30. VIX up 13%. JP Morgan. S&P down 55, June 21st. Closing position on JP Morgan. Airbnb is down $5. New opening position on Square. Low B plus grade, Square. Took that position off. It showed me a 30% gain in less than an hour. Couldn't resist. S&P up 58, June 22nd. So I sold Amazon. And then you can see that this is what I was referring to previously. I rolled in the Airbnb from July 16th to July 9th. So this actually, I got very lucky where I rolled it in by a week and then financed it by selling the Airbnb 172.5 calls. So this got lucky. So I took our existing 135, 125 put and reduced the expiration by 1 week. Then I financed it. I feel that there may be a market pullback in July, so I want to reduce my short put exposure. As you've noticed, we've been reducing our longs and we've been selling more calls than usual. Small adjustment in Tesla, not required. I just wanted to reduce the expiration by 1 week. Financed it by selling the 860 call. S&P up almost 22, June 23rd. No trades on June 23rd, it looks like. S&P down almost 5, June 24th. Closing trade on Zillow. Zillow's all closed out. New opening trade, B grade. Closing trade on PayPal. The original is above. So sold it for 46, bought it back for 12. So here I had to break the trades up because it had problems filling. So I rolled the spread to a naked option while also reducing the expiration on the put side and the number of contracts. That was actually a bad trade, the 310 call, because that trade actually got challenged. I know that in July, PayPal hit a high of about 307.5, 308. So one time that 310 would have gotten challenged. Eventually it showed a profit because I had to roll up the short put in order to give myself additional safety net on the short call. But in hindsight, I mean, obviously no one can tell the future, but that probably wasn't the best trade. Still, made money on the calls. I actually ended up having to roll up the short put to about 265, and now at this specific moment, PayPal's trading at like 295. So we'll see. I might have to roll that down. The short put. VIX is very low. Rolled the existing Amazon forward by 3 weeks. Increased the strike by $200. Picked up an incremental 12 cents. So actually, I rolled in the Amazon contract by 3 weeks. I didn't roll it forward. I closed out the August and then I sold the 2700. So I didn't roll forward. I rolled it in, showing like a $2,000, $2,300 profit. S&P up 24. June 25th. New opening trade on Amazon. Picked up about $350. Tesla, small adjustment. Rolled up the put by $30 and the calls by $40. Picked up a small credit. Tesla crashes next week, then I can easily roll the put option down. So this option expired. Interesting day. S&P up 14. Volatility was down. Amazon was down 48. Tesla was down 8. June 28. Nice opening. S&P relatively flat. Volatility was up. So here I sold the 1100 call. With calls, I'm like very, very conservative because I guess one of the good things is that when you sell calls, you're not necessarily concerned about like takeover risk. Takeover means that you're not necessarily concerned about like a black swan event where, and I know that on like January 7th and January 8th of earlier this year with Tesla, it went up like 17% in 2 days. But in general, you're not really overly concerned where if NVIDIA is trading at 800, that it's going to pop up to about like 12 or 1300. But even so, with calls, I do try to sell fewer call options because the market does have an upward bias. And when I am selling calls, I'll try to sell them further out of the money. So on the positive side, your win rate on calls, as long as you roll them, is going to be higher. But on the negative side, selling calls is usually going to be more stressful because your positions are going to end up getting challenged more frequently. MasterCard, I open up a new position, 2 new trades, NVIDIA. Probably could have been like more aggressive with the NVIDIA call, and instead of selling like an 1100, I probably could have sold like a 1000, and probably I would have picked up about $1.80 or $2 a premium instead of $72. But it is what it is. I'm not greedy, so whatever. All right, here I closed out Airbnb for 28 cents, and I closed out Amazon. So here's the closing trade for Amazon. Sold for $600 and bought it back for $50. For Airbnb, had one remaining position and it expires on Friday. The 172 and a half and the 175 calls, S&P up 10. The volatility was also up, June 29th. So I just rolled this position, picked up an extra $180, and I rolled it up by $180. So that's interesting. So I increased the short put strike by $180 and I picked up an incremental $180. I think that's just coincidental. There's like no, that's just coincidence. So far out of the money, the original's here. So I've collected $536 of premium overall in the position. This just filled, close for a large profit. Ignore the date to the left. That's when it was submitted as a GTC order. So I reduced risk by rolling 3 to 1, picked up an additional $130. So it looks like that trade was showing about $2,000 profit. Trade was very profitable from the original 3 positions that we rolled until the closing. We likely made about $3,000 in profit. Not much movement today. S&P only up 1. Volatility was up slightly. June 30th. Market's relatively flat. Small adjustment just filled. So you can see that I wanted to roll up the short call from 310 to 315. And I financed that by increasing the short put from 230 to 245. And that was the only trade that we made. S&P up 6. Volatility was down. All right, and then that's June. So I'll do July and August. So I'll go through all my trades in July in a few weeks in August, and then I'll post it. And I hope that you found these valuable. Please subscribe to the channel, turn on post notifications, and turn on video notifications. Please also like this video. You can visit beststockstrategy.com/memberships and enroll in the 7-day trial. It's only $19. And I hope that you found this video valuable. If you have any questions, please leave a comment below. Visit BestStockStrategy.com and submit your email address to receive valuable free training. Please give this podcast a positive rating and review. If you have any questions, visit BestStockStrategy.com and send me a message.